Good evening, everyone. Well, the world of finance is undergoing a remarkable transformation. And at the forefront of this transformation is clearly the lending industry. Now, whether we talk about the traditional banks or the NBFCs or even the disruptive fintech players, instead of competing with each other, they're now converging to create something which we are seeing unfold in front of us as the lending revolution. And to talk about this lending revolution and where it is headed, I have with me the top voices from the banking and the financial institutions right here. Each of them have a wealth of experience to share and of course a unique perspective and most of all, a commitment to shape the future of lending in India. So let me kickstart this discussion by asking you, Shallu, if you can help us and all our viewers really understand, how are you looking at this transition really unfold from traditional banks to NBFCs and now to the agile fintech players? And how is it really helping the larger underserved population of the country?
Thank you, Sakshi. Good evening, everyone. It's a very interesting question. So, banking and lending has gone through a paradigm shift, especially in last 2 decades. From a basic banking services, we have moved to a universal banking approach. Answering to your query, what has led to that? To my mind, couple of factors. One is obviously changing customer needs, regulatory aspects, technology advancement, and responsible risk management. So all of this has led to this kind of paradigm shift. If I talk about lending specifically, what's happening around us and what's making it better from a customer aspect or from an institution aspect, things which getting focus is like end-to-end digitization, right from onboarding to assessing customer, underwriting customer to back-end operation. Every institution is actually working towards that, giving a good experience to the customer and obviously bringing in efficiency for oneself. Second aspect to that is, self-service or being omni-channel capabilities. Here what it means is that for the entire value chain of the lending, the road is paved for self-service today. You talk about disbursement in customer's account, you talk about payment, we have numerous channels, payment channels available. You talk about post-onboarding facilities. Everything is available today at a click of a button. So this has changed the face for the customers. Third is artificial intelligence and machine learning. Though it's a very, very large subject and there's a lot of focus, a lot of attention, and it's growing as we speak. From risk control, portfolio monitoring, taking away the redundant jobs and automating that, all of that is happening around us and it will continue to happen and more things we will see around this. Last but not the least, the usage of data and analytics. I feel now we are able to take more informed decision. We are able to do away with some amount of biases. So this is helping us to grow much better and take better decisions. So I think all of this is helping in fostering the entire industry from a lending as well as the banking side of the business.
Okay, thanks a lot for that overview. Mr. Babu, let me just take this question across to you and specifically ask you on consumer lending, where this space has seen a sea of change happen, from ticket size of loans becoming even sachet size, from newer products like buy now, pay later, peer-to-peer lending. All of these are becoming way too popular. And how are they really enabling faster credit growth across the country, and how have you seen this change in your organization as well? Could you give us that data?
Thanks, Sakshi. I fully agree with Shallu what she has mentioned. So if you look at an organization like Karur Vysya Bank, which is 107 years old, it's a legacy organization. 5 years back, 4 years back, so we thought what we need to do, what is the way forward. So like an eagle, after coming to a stage, it will think over. The beak is not working, wings are not working, what you need to do. So for that, then we thought, do we need to go for digital? So we have gone for digital. Digital has helped us not only in the consumer lending, both on the SME side and the corporate side also. Very well. Earlier, everyone was judgmental. So you look at the face of a person and all, he will tell, okay, this person is good, I'll give a loan and all. The subjectivity is out now. When it is passing through the LOS and through various checks and balances we have, we will be knowing whether this decision is correct or wrong. Earlier our approval rate used to be 90%. It has come down to around 48%. Then people felt saying that, what is this, are we not doing properly? Then, posterity, if we look at it now, if we divide our portfolio into two parts, pre-digital and post-digital. Pre-digital, if our stress was 7%, now the post-digital, the stress on the portfolio is 0.6%. It has come down so drastically. Then we understood saying that rather than taking a 90% approval and having 7% stress, having a 48% and 0.6 is much better. This is the first thing. And next thing, while doing this one, there was a challenge. So challenge in the sense that getting the technology, all these things is easy. But the manpower, whoever are there, the staff members, the changing the mindset is difficult. Because earlier, so they were enjoying the liberty. What all decision want, they can take it. Now, system will dictate what you need to do. So that way, the main challenge what we faced in the whole process was change management. We had to show to them, these are the benefits you are going to get. Initial years we couldn't show. Now the data is there to show what we are. So next thing is, in addition to what she said, two more big drivers what I found was partnerships. Earlier, each one of us, we were working in silos. It can NBFC, fintech, bank, all of them. Now good thing is, people have understood what is my strength, what's the weakness. So both with some strength and weakness, they are coming together, they are working. In fact, I will tell you, we had a good partnership like Axio is a fintech NBFC based out of Bangalore. We entered into a partnership with them. And in turn, we arranged arrangement with Amazon. Amazon Checkout Finance. When we have gone there, a consumer tries to buy something there. It passes through Axio, it comes to us. It combined both of us together. We had the underwriting model. And based on that, the customer need to give only 3 fields. PAN number, date of birth and Aadhaar. Once he gives it, the sanction will be completed within half a minute. Half a minute, it passes through the entire thing. KYC will be completed, it will be going back. So now, for the last 3 years when we are doing it, the stress level is absolutely minimal because a lot of investment has been made by the partner in the AIML and we also paid a lot of investment there. So in the process, it is working so well. One more good thing is, 107 years, how many customers we have acquired. Last 4 years, that number, 60% of those customers we have acquired this model. So that is the strength of this. Now over and above this, what we can do, we are working on that. So that way partnerships have helped us a lot, which we may not have the suffer advantage of fintech and all. They have that, but they have the disadvantage of not raising money because we have the capability to raise the money. So that way, over where it was a competition, it has become collaboration now.
That's a wonderful point, Mr. Babu. But you know, on the flip side, I have to ask you that what happens on an everyday basis is those people who still don't want credit are getting calls at least 10 times a day even now. So what are you doing about all of those?
Absolutely. That is the reason what we thought. There are 2 options for us as a banker. We need to go for a consumer lending, personal loans or these sort of lending. What we have chosen is someone going to an e-commerce platform, if he chooses to buy a particular item, for that only we are financing it. So that way our money is ensured, it is going for a particular purpose. So no specific calls will be going to anyone at all because it is not a clean personal loan. We didn't want to touch that area.
That's wonderful, sir. Let me come to Mr. Davis now. Mr. Davis, if you could also add and talk about some of the innovative products and services that you believe could actually shape the next leg of modern lending landscape going forward from here. If you have yourself implemented some such innovative products at your own organization, some which we will see in the coming years.
Thank you, Sakshi, and good evening. I think my colleagues on the podium have covered some of the important ground, but what I'm going to talk about is bringing Bharat to India. See, up to now, all the banking and technology has been very much focused on English and possibly Hindi. But we at Ujjivan, when we looked at financial inclusion, we felt that there was a part which we were all ignoring. This is the semi-literate and possibly less literate people in the field who cannot use banking apps because they don't understand what the banking apps are all doing and how it works. And so we, after a little bit of research, have come up with something called a Hello Ujjivan. It is the first app which is voice enabled, and it's a technology which we introduced in 8 Indian languages. And what that does is it prompts the users in a voice enabled way to go about using a mobile app. What that does is it enables people who otherwise used to trek a few kilometers every now and then to repay their loans to be able to digitally repay without having to make that trek. It tells them how to go about, insert your PIN and code and OTP and everything else and make the transaction. So that is what we have done in 8 languages. And that is an award-winning app. It's the first of its kind in India. And it is enabling people who are not part of the ecosystem to be able to come forward and be part of that. And I think once we bridge that gap and we come over that, then we can use other technologies to make it go forward. And I think that is what is important. But while I say that, I'll also bring another aspect to it. All this technology which we are driving people to use is also breaking down the very core of the way in which we do business. And that is very important that we look at that because, the way in which, for example, the microfinance companies used to do business is to have regular contact with the customer once a week, once a month, depending on what the model was. Now you're telling them, go and do everything digitally. Don't come to the center meeting. You don't need to see me. But that is breaking the model. And when the model is broken and you're changing that, you have to be able to take care of the control systems, the back support systems. All of that have to change. So technology in the front is not by itself going to be able to solve the problem financially. You have to take care of what's happening behind. And together it's going to move forward. So I think it's a very interesting situation we are in. So much is happening in the field and so much is being done. Even in a place like Bangalore, we have the innovation hub of RBI, which is actually driving a lot of things in technology. But what is being done in the front has to be matched by the risk and support systems at the back. Otherwise, models are going to suffer. So all in all, what I'm trying to say is that we are in a very exciting time. Lots of new things are happening. And, the lending revolution is here today. Thank you.
Absolutely wonderful. Well, Shallu, let me understand from you, what do you foresee as the new challenges emerging in the modern lending landscape now?
So I feel there are many, but if we focus more from the current pace which we are going, certain things like the cyber security, I think that is one thing which all the organizations and everybody has to take care. Second is being responsibly following the regulatory aspect in letter and spirit, because it's very, very important that we implement all the things which is being rolled out. So these are a couple of things these are the two things which I feel from an organizer, top of my mind, what I feel is the things which has to be taken care of.
Okay. Mr. Papu, could you also tell us, when we talk about innovative products, the way the next leg of modern lending landscape is going to shape up, we're also looking at the regulator, RBI talking about UPI-led credit lines. Could you give us a sense of how do you see that is going to be taking part in the lending revolution?
I'll tell you, if the lending revolution started, the foundation is the DPI. Digital public infrastructure, what all started, it can be KYC, Aadhaar, Locker, with all these things. Now, in the pipeline, account aggregator is there, ONDC is there, OCEN is there, and Credit on UPI is there. All of them that come up, end to end, it has become pretty easy. Now, onboarding right from end to end here, it's pretty easy. Tomorrow that comes up, that will be much, much better, I feel. So coming to one more point, the challenges what Shallu was mentioning, I also feel as a banker, when we are thinking of partnerships, so you have to be pretty careful about the partner too. The 2 points what she have mentioned, you may be doing all those things, But you need to be doubly sure the partner is equally compliant with those things. If he is not doing, the hit will be on you. The reason is simple. We are dealing with the public money. The liability, the deposit, public has trust, they have given it. Other side, they are lending. So if tomorrow something happens there, as a banker, we will be losing the trust. So the biggest challenge what we feel is how the partner is doing these things, the insights into that is very much important for us.
Very important point, and Mr. Davis, if you could add to that, because recently we've also seen the regulator step up with its scrutiny into the fintech space, talking about regulatory concerns over there, or be it talking about overheating in the consumer lending in the unsecured book as well. How are you looking all of these challenges, and what do you see is the way forward for all the players, whether it's the traditional banks or the NBFCs or the fintechs and the partnerships that Mr. Babu has talked about? How will they move forward amid these concerns that the RBI has brought about?
I think the RBI, took a look at what the changes which are taking place. I mean, basically, when a banking license is given, the RBI expects you to underwrite risk, and that is the job of the bank. Now, if you subcontract underwriting risk to somebody else, the main part of your business is being taken away. And that, I think, is the message that RBI gave when, the fintech revolution started. There were no guidelines. Some of the banks were subcontracting their underwriting to the fintechs. And I think that is clearly out of line within the way in which licenses are given. So to that extent, pulling this whole thing back, providing more of a framework and regulations is something which I think is helping everybody, because it gives us, as banks, a guideline as to what we can do. It also tells the fintechs what is their limitation and where they have to draw the line. So I think initially there was a lot of angst and a lot of concern among the fintechs that their business was being taken away or the business had to be changed. But today I think everybody understands how they have to operate, and I think we all know that where the lines have to be drawn. So I think that is a good thing, and it's the way in which evolution takes place in business, and how things change. So as a connector, you can always deal with a fintech, but when it comes to taking care of the credit risk, that is the job of the bank. So I think that is the message which came with the fintechs. And also the growth in lending. I think, RBI now has, after having inspected many banks, they feel banks are using, models and all sorts of systems which are being self-driven. And those models need to be examined from time to time, to be reviewed, and to make sure that the correct decisions are being made. Otherwise, things can go wrong in the system system can overheat, and we could have a problem. So I think all of these, if done properly and in the right measure, is putting a good check on systems, and it will allow us to take one step back before we take two steps forward. So all in all, I think it's a good measure, and if it's done properly and accepted properly, the financial system in the country is on for a longer, good period ahead.
Okay, wonderful. Shallu, let me come to you on that one, especially when credit risk is something that we are talking about. You talked about the advancement of technologies like AI, data analytics, machine learning. How are you looking at the role that such new technologies will play when we talk about assessing credit worthiness of the consumer and also management of the credit risk going forward from here?
So as I said, this has a very large scope, and already we are seeing some amount of role of AI and ML already coming into play, right from scoring models, portfolio monitoring, stress testing. All of this we are already seeing the usage of AI and ML already has seeped in. I think as we go forward, there are multiple other factors which can be taken over by this particular stream of AI and ML, and I'm sure today there is a limitation that there are maybe people are doing the job. Tomorrow, if you are bringing in such kind of tools, you can enhance the portfolio monitoring to a larger base, and you can see the portfolio in a much better, wider view. So this all will help to manage the risk much better.
Okay. Mr. Babu, let me come to you now. We've talked a lot about the consumer lending, but when it comes to MSMEs, there is a clear shift that's taking place from what used to be a GST-led, lending to now cash flow-based lending. Do you see that as a better model for MSMEs, and how do you see that growing for the small shopkeepers or small companies at large?
Absolutely, what you said is correct. The reason is earlier we were going through a traditional model. It can be a balance sheet. So many of them, they may not have those sort of a sophistication. Now, as she was mentioning, a lot of data is available. The surrogate data is also available. It can be e-commerce, their behavior, whatnot, and social media. With all these things, when we build the models, underwriting models, that too particularly when you are partnering with fintech and all together come and they do it and all, the models are working very well. Many of the MSMEs who were underserved earlier, unserved, we are able to do them now. So that too, with a feeler initially we were seeing, are we taking it too much of risk? But over a period of time when we saw, it's not a risk actually. When they wanted money, we are supporting. They are willing to pay that interest and all. So our experience is pretty good. So there also digital has helped us very well. Now Cholamandalam, a biggest another NBFC is there. We have entered into a co-lending arrangement for the commercial vehicle. We are not strong in that. They are strong in that. So in the process, we are able to learn what they do. So that way, wherever, like MSMEs also, we are partnered somewhere. So MSME is also underserved through digital, through surrogate data, we are able to do a lot.
Okay, Mr. Davis, if you could add on to that, do you also believe that this is a better financing model for MSMEs when we talk about cash flow based lending, or do you see higher risks there?
Cash flow, the growth of the cash flow based lending is something that has to be helping the economy forward, because that is an area in which you are able to manage the streams and to be able to see the sales coming in as well as the inventory build up and things like that. So to that extent, the cash flow lending is important. But a lot of MSME lending is still secured lending, and I think that is the way it will stay for a while. But as we start using data and data analytics, that is going to be the game changer, and also supply chain financing, and to be able to also make sure that you control the cash flows. If you're able to control the cash flows as a lender, that is something that will be able to, and that is what actually fintechs were trying to do, and bring into the system. So if that can be pushed ahead, I think there is going to be a lot more change and a lot more benefits to the MSME segment. And I think that is the only way. This is a growing segment. This is a segment on which Indian economy is going to move forward, and everything that we do has to focus on meeting the needs of this MSME segment.
Okay. Mr. Babu, if I could just come to you and understand, of course we understand the advancement of technologies, the wider reach that digital lending has also helped traditional banks to really reach out to. But is the money really reaching out to the right people is the question.
Yeah, that's what, because earlier the ticket size used to be pretty high. Now the ticket size of individual loans has come down drastically in the last 2 years. That implies saying that, so we have come down to a level where people need the money. At a point of time, 1 crore and all you are doing, now the ticket size has come down to 30 lakhs. So that way it has become quite granular, and many people who want, they are able to lend them.
Okay, just about 1.5 minutes to go. So Shallu, let me come to you for the last word. If you could tell us, what would be the emerging trends now for the next decade in India when we talk about the modern lending landscape?
Sure. So I think digital is ever growing, and a couple of trends we all are seeing. AI, ML, obviously within that generative AI is catching a lot of buzzword. We'll see a lot happening there, despite whatever the negative side of the sound we are hearing, but I'm sure we'll get there, we'll get it in a responsible way. That's one. Blockchain is one thing which for this industry I feel will definitely help. It's helping already, and it will further help us along with that. Plus, end-to-end digitization, I still believe there is a lot to do. Front-end and back-end integration continues to be the key to this, because as an industry we've been more into the legacy systems, and there is a lot of requirement of adopting to customer needs, the fast pace, bringing digital tools. So I think the end-to-end digitization would be the next or the continued trend which will be there.
Okay, Mr. Babu, do you want to add to that? What do you foresee? Where are we going ahead?
No, what she said is correct with blockchain and all, but as it is many of the banks, they have moved actually. If you look at it, a bank like Karur Vysya Bank, end-to-end more or less we have digitized. Even the documentation is also through biometric. For the last 3 years, everything end-to-end right from the beginning to end, it's absolutely paperless and few of the cases presenceless. It's going on well. So, but bigger loans and all, it's a hybrid model is still going on. So we are in that particular path of moving towards digitalization.
Okay, that's a very good note to end this special panel discussion at. Many thanks to all of you for sharing such wonderful insights, and the future of lending definitely looks bright with all of you at the helm of it. Thank you so much. Thank you so much, audience.